and joining me with a closer look on what's currently playing itself out on that market scene in midday news is independent analyst Jacques Pretorius. Jacques, always a pleasure. Good afternoon.
Hi, thank you for having me.
Fantastic, Jacques. Let's get right into it. I think upbeat screens all around, very comforting. We're halfway through the week, so I think we can say it's comforting, and a little bit of more strength being enjoyed by the rand. So all in all, not too bad of a week.
Yes, I think obviously we saw what happened to the rand last week. We're seeing a bit of strength this week. I think we've probably seen the top of the rand last week. I don't think we're going to see a level of above 1950, and I think we've got the potential now for the rand to move back to 18 against the dollar.
That is very comforting, and I hope it really is true for all of us, Jacques. Let's also talk on what we are seeing markets contending with today with these green screens. Of course, we know we are anticipating that UK budget, but an important one, I think, is still the conversation around China, their GDP forecasts, and just the prospects that holds for financial markets all over the world.
Yes, I think China is trying very hard to support their market with various ways of stimulating. It looks to me that there are a lot of signs pointing in that direction, and slowly but surely they are coming right. I think they, to some extent, could support our markets going forward. They're obviously part of the emerging market complex, but it's just to me interesting to see. If you look at the emerging market indices, especially the MSCI index, how the weighting of China has fallen in that index to around about 20%. And interesting enough, how India has picked up to very close to the 20% now, and how Taiwan is also going to 17%. So just as an interesting side comment there.
Also keen to get your thoughts on some of the company news coming out today. There's quite a bit to digest. For me, the most interesting one for today is certainly Marion Roberts. It looks like, narrowing losses are what they're seeing, Jacques. There was a time we didn't know if this company would even exist at this time. It really was a tough times, but it looks like from a long-term perspective, they might just be okay.
Yes, we're really hoping for the turnaround there. We've seen them go through very tough times in the past, perhaps levels of gearing, having had to issue some stock to reduce the gearing levels. So yes, perhaps there's a base for the longer term, hoping that infrastructure development and growth in the economy will recover that. It still looks like the growth for this year is pretty low. Obviously, after the figures we saw yesterday, on the GDP, slightly missing, but let's hope the company is in a position to manage that going forward.
Also keen to touch on Quilter. What we are seeing there, of course, are affluent customers really going in for financial advice. I guess this might be what happens when people are a little bit cash-strapped, when the economy is a little bit wobbly. And Quilter really managing to do well here, increasing their assets under management, but also just seeing profits jumping quite a bit.
Yes, I think, it's funny enough that we look at Quilter. I think we must view Quilter as a slightly different animal as opposed to a pure asset manager. I think it's more of a platform based in a technology company. They've been growing very well, even in this tough circumstances. I think they're the type of guys that will be able to continue to increase market share and build on the good year they've actually had. They've got a lot of plans in place to cut costs and increase their margin. So yes, I view them slightly more as a technology company as opposed to a pure asset manager. And I think they do have a strong future going forward. They're also obviously a nice rand hedge, being quite big in the UK. And I'm thinking that after this whole Brexit story, the UK can actually slowly but surely start recovering now. And there's more to come from a company like this.
Let's touch also on Sea Harvest, also a company that is reporting quite a decent jump in the EBITDA. At a time, Jacques, when many companies just aren't, we are seeing increases in revenues, but we're seeing costs really pulling a lot of companies down. But not Sea Harvest. They seem to have weathered the storm okay, and reporting their 15% rise in EBITDA.
Yes, they've done well under circumstances, I think. I think one must just remember they are sort of in a way cyclical, very dependent on the fishing catches. But yes, I can support them. They've done very well under the circumstances.
I must also ask you about, what we are seeing along with Brimstone. I think what's important with Brimstone is that they are heavily invested in the cyclical business that you make mention of, and they also are reporting very strong returns there, but this time on the back of Oceania.
Yes. Once again, Oceania is also doing reasonably well under the circumstances. I think we're sitting in a very, very difficult space right over the last year. The companies that can actually survive through this difficult times, I think they're well placed for the future. And this is one of them that's probably also placed in a position where we can see a bit of recovery coming through in the next few years.
And then staying, I guess, with proteins, let's touch on what we're seeing here with Astral as well as Quantum Foods and the decision for Astral to offload its stake in that business. Of course, we know that this whole industry has seen headwind after headwind. And now with this 10% offload by Astral, I'm wondering if that's meant to do anything for Astral and what it might signal to us about Quantum.
Yeah, I think it's a function of the pressure they've been under. They've had a lot of headwinds. Load shedding that has not helped them. They had a lot of difficulty and damages because of that. And perhaps it's a function of just downsizing the operations slightly to cope with the demands for the gearing levels and the growth in the market, this whole situation in the market, just to survive the short term to grow the longer term.
Fantastic. I'm keen to get your stock pick in a bit, Jacques, but first I'd like us to reflect on counters that have found favor with your industry peers. Let's do that.
I'm going with Goldfields. I think I'm a little uneasy about what's happening in Eastern Europe at the moment. And I think we are seeing NATO bringing more and more assets closer to Russia. There is a risk that there could be a misunderstanding or a mistake, and that could trigger something even bigger. So my concern is that I need to try and hedge some downside risk, and basically using Goldfields as a stock for that.
I'm looking at the local market for things that aren't too expensive. They might not be exciting, but they're solid. And Life Healthcare, I would say, ticks the box. They are going to pay a 6 Rand special dividend. And the share price is, call it, roughly 17.50 Rand. So that means that excluding the special dividend you'll get in roughly 2 months, it's trading at 11.50 Rand. And I think the fair value is closer to 13 Rand at least. Yes, it's not an exciting sector, but it's solid. People will still get sick and need to go to hospital, notwithstanding NHI. That's the big risk that could happen at some point, although it looks like the chance of that is also getting lower. So that's my stock pick, Life Healthcare.
Is Shoprite. Shoprite is my stock of the day. I mean, the business is just, doing very well. As you rightfully said, they have been shooting out the lights. Double-digit growth as well. When you look at the business, revenue is up about 14%. And they're taking quite a lot of market share, as we can see. I mean, the other retailers are not faring as well in this environment. They also did expand a few stores across South Africa, so that's also playing out very well for them. Also, if you look at the 60/60, they also grew their usage of the app about 60%. So I mean, growth all around for the business, and that's why it's my stock pick today.
All right, Jacques, to get your thoughts on some of those counters, we have Goldfields, Life Healthcare, and Shoprite.
Yes, I agree with Mr. Verster on the Life Healthcare. It's unexciting, but the dividend is very attractive, so I'll go along with that. Regarding the gold counters, gold has had a nice run, especially in the case of Goldfields as well. Goldfields is probably the best gold company out there. I would say one thing is that they're probably also going into a phase where they're going to have to spend more on capex to develop mines. And perhaps there's a bit of risk from that point of view. So from that point of view, I might just play it through the ETF, the GLD ETF. But I agree with the geopolitical risk-sitting situation out there, and gold's probably not a bad asset to have at this point. Shoprite, great company over the long term. They're market leaders on the online shopping side of it. I think that's going to continue. Other companies like Pick n Pay need to do a lot of catch up. Shoprite's come back a little bit recently. They're also one of those companies that should benefit from the interest rate cycle declining in the second half of the year. So I would probably stick with that one as well.
And keen to get which counter
Thank you.
you're loving today?
I'm playing a bit more of an international flavor to my portfolio. I've looked at India as a country, and there's phenomenal growth going forward there. They're probably in the same situation as China was about 10 years ago, but with a lot more levers to pull to actually have the benefit of that. So there is a Satrix India ETF that one can buy. It's been performing well, but I think there's still a long way to go. So that'll be my stock bet of the day.
Well, Jacques, a pleasure having you join us this afternoon. Thank you so much for your time. That was your midday markets update with independent analyst Jacques Pretorius.